The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Pete in Long Island. Hey, Pete, what's going on?
Hey, Tom. Good evening, and I want to give you a big thank you. Last night I called for your advice, and you gave me such wonderful and correct information. If you remember, I was short 3 gold stocks,
yes.
NEM, AU, and AEM.
Right.
And based on your opinion, you've been right on the mark with this. Boy, it was wonderful, Tom. I got to be honest with you. It's unbelievable what you're doing for your radio listeners.
Well, I appreciate the call, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. I start with the idea that nothing is impossible and everything can be done in the end. Market-wise, let's take a look at it out here. We have the Dow down 397, Nasdaq's off 128, S&Ps are down 42, gold contract up $5.40, trading at $1,158 an ounce. Silver down 23 cents at $15.28 an ounce. Platinum down 7 at $1,024 an ounce. Copper down 2 pennies at $2.99 a pound. Light sweet crude, check this out, folks. Down another 95 cents. It was down $1.50. $40.36. That baby's going to $32. Wild, just absolutely wild, but that's where it wants to trade. Bonds, ever-ready bond market, bottom line, going after its highs. You have the 10-year up 12 ticks, 128.22. 30-year up 5 ticks, 160.08. King dollar, kiss it goodbye. Not really, but bottom line, down 1,000 ticks at 95. That's going after its June 18th swing low, which is the 94.40 to 93.30 level. You got the euro up 116 at 113. You have the yen down a penny and a quarter at 122.12. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We put up the SPY. You got a down day, fast, furious, all of the above. Bottom line, folks, okay, this market is not only going to lower prices, you still don't have fear in this market, which is just a total mind blower. You don't make bottoms until you get fear. Thus far, we got a down tick of 12.16 today, which is a start, by the way, okay, which is a start, but you only got one, okay? So, unfortunately, what is happening is that as the market goes lower, people aren't paying attention. And they're basically, we're going to see lower prices. I expect what you're going to see out here is that right into the close, man, it's just going to keep, bailing out fast, furious. There's no bids in the marketplace right now. A bid specifically is that someone's stepping on the other side. And why would someone step on the other side on a Friday in the summer when the market has just gone down, 1,000 points? Bottom line is there's nothing to step into. If we take a look at this, and you put this on the weekly basis, what you're going to have right now the SPY's at 198, and we've gone this week from a price point of 210 to 198. Now check it out. The first target that we have here is this 191. 191 is the high of the October 2014 low that I suspect we're going to get into. The real key is that are you going to just blow that away with volume? Well, guess what? The way that we're trading right now, it'll only take another week for the S&Ps to get in there. The NDX 100. What you have with the NDX 100, you talk about selling away, man. Oh, baby, they're selling away. We take a look at the NDX 100. We're at 103.31, and the top of that bar of the October 2014 level is 94.99. And same type of setup that what you had this week is that we've gone from 111 to 103. Bottom line, that's where that baby wants to go. Let's see. Gold contract. What do we have with gold? Bottom line, gold wants higher price. Gold contract out here, we're trading at 1158.10. We got up to 1167 this morning. You had 185,000 contracts, and that's what you need. This is a sweet move, no doubt. Now, you're at a point here that gold should basically build some cause. That'll be a sideways move to make the next leg up. The next leg up, I suspect, is going to take gold first up to the 1206, 1207 area, which is the highs of June. Next move is going to take them up to the highs of May, which is the 1234 level. Bonds. What do we have at the bond market? Bond market's a trip, man. Bonds have been given the most consistent type of information in this market for a long period of time. And what we have inside the bonds is that if we take a look at the 10-year first, this is what you have. 10-year right now is 128.23. We got over the swing point, and right now, we're not going to have the volume for an ABC up. So the high in the 10-year bond, folks, okay, is 129.21. The swing point that it's taken out, I just can't picture it doing 500. Well, I have to do 400,000 contracts. Bottom line, we're going for the highs at least. And that is a mind blower, no doubt. We're at 2.042 in the yield. We go take a look at the 30-year. What you have with the 30-year? 30-year. Let's see, we've done 281,000 contracts. We are, the high, that swing point is 160.22. We've hit 160.27. And the 30-year might do it. This is going to be wild. The 30-year actually might get the juice. We'll see where it is. Right now we're at 281,000. It's 336 that you'll be looking for. So bottom line is that you can expect that bond market wants to continue higher. Now, King Dollar. What do we have with King Dollar? Bottom line with King Dollar. King Dollar has some juice on the way down today. We've done 60,000 contracts. We're at a price point right now of the 94.98, so we're getting into that level. It's 94.40, the top of that level. And by the way, if we hit this like we're trading right now, it's going to just blow it away, because that swing point that I'm talking about and have been talking about for a bit, meaning the June 18th swing point, 52,000 contracts are at that level. So bottom line, there's not only action in this marketplace, but what you have is that if we go overseas, folks, okay, every market. Let me walk you through a few markets here, okay, because this is what we had. You had Shanghai down 4.5% last night. Hang Seng was off 1.5. You did Nikkei off 2.9. We go to Europe. What do we have in Europe out here today? We had in Europe, you had the DAX down 3%, 2.95 rather. The CAT down 3. The FTSE down 2.8. Our markets right now, you have the Dow down 2.6. The Nasdaq is 3%, and the S&P's 2.3. It's going to be a nasty close once again. This is Tom O'Brien. This is TFNN. You get the Dow down 450. Nasdaq's off 148. S&P's are down 48. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we have the Dow Industrials right now down 440. You get the NASDAQ off 149. S&Ps are down 48. There's some real damage that's happening out here, folks. So volume-wise, of course, is going to be huge on the NYSE. And what you do have is, so you get option expiration, which is going to, at the end of the close here, folks, you get a lot of different things end up happening, but the volume will surge. We already have huge volume. We have 825 million versus 927. This will end up coming in at like 1.3, 1.4 billion on the NYSE as you're going to lower price. You take a look at the NASDAQ. The NASDAQ is already at 2 billion. The NASDAQ will turn around and do probably 2.5 billion. That's how this seems to be shaken out. Now, if we look inside the Dow Industrials first, as to the weakness out there, well, the weakness is everywhere. That's the bottom line. But there's not a Dow stock that is in the positive basis. You have Apple is leading on the way down. Apple is down 622. You have Microsoft would be number 2. That's down 212. Nike is down 491. You have Goldman Sachs down 752. The strongest stock inside the Dow Industrials happens to be 3M. That is down 50 cents. Disney has been taking a beating, of course. That's down 69 cents. You have Cisco is off 22 cents, and DuPont is down 48 cents. Inside the NDX 100, this is what you have inside the NDX 100. We have the bringing it downtown is Intuit. That's down 12.98, trading out at 89.95. Ross Stores is down $4.95. That is trading at 50.35. You have Netflix down $8.38 at 104. The strength inside the NASDAQ NDX, Seagate Technologies is up 41. You got JD.com, who's been down all week. That is up 11 cents. ADI is up 22 cents. Some of the high-volume stocks, and we do have a high-volume market here, folks, goes like this. Facebook is down 430. Apple's one of the highest volume stocks out here. That's getting taken to the cleaners. It's down $6. You have Microsoft down 2. Netflix down 8. Walt Disney, same characters, actually. Wells Fargo is off $1.70. You have Halliburton down 171. We have Morgan Stanley down 182. Now, we go over and we take a look at some of these as to where, this baby wants to trade into. If you go, this thing has been powered down. We started this baby down yesterday. Deere came out with its numbers this morning. That was basically gapping down $6 rather. Deere had closed yesterday at a price point of $90.65. It opens this morning at $85.91. You're trading at $83.51 now. What does that set up? Bottom line, folks, all these equities, you talk about fast, furious, all of the above. Yeah, I mean, it's in spades too. And you know what? I expect that, this thing is relentless. And Monday morning, the way that this looks to me is that, Monday morning is going to be more problematic. The reason that my head is going there has to do with the aspect of it has to do with the aspect that how all the world markets traded. The world markets, folks, not only traded to the lows, they have volume at the lows. They look that, guess what? You can get another day down. And as nothing goes down forever and nothing goes up forever. There's no two ways about that. But what does happen, because the consolidation was so long and the distribution of shares was so long, meaning that we went sideways, for 9 months. When you go sideways for 9 months and you have light volume, that means the operators have been dishing out shares on a continual basis. Once the trapdoor opens, which it's opened, there's no bids. There's zero bids, and that's what this market is facing right now. It's facing a market that has zero bids on it. And when we were doing the show this morning, we do the Nadex show. Darryl Mott and my son Tom. Tom had brought up a great point, and what it was is that last night we're down $400, right? And it wasn't even on the top of the news. That says quite a bit, folks. Okay. When you start making bottoms, guess what? You are going to have that on the top of the news. What you're also going to have is that you're going to have these tick indices, these tick readings come in big. Now, we just had the first indication that, we finally got some fear in the marketplace. We just had a minus 1457 come in the marketplace. That's a start. That's a start. So the way that the tick goes like this, what that means is that simultaneously you had 1,457, I think that's what I said, 1,457. Let me see. Let me get the exact number again for you, so you can see what this means. Yeah, 1,457. So that meant that out of the stocks in the New York Stock Exchange that were trading, simultaneously, 1,457 were getting sold on the bid. Okay, that is a lopsided deal. So the way this works is this: what you look for is that you're going to look for. So that's a downtick for today. What you'd look for on Monday or Tuesday is another downtick. That's at least 70% of that downtick. Simultaneously, what you're going to be looking for is you take the trend. The trend's the 5-day arms. You want the trend to be running at about 8. Now, there's no doubt out here today the trend is at 2.28. That's a big number. Yesterday was 1.36. When a trend is 1, folks, it means that all the stocks on each side of the marketplace are getting the same type of business. When it goes to 2.28, what it means specifically is that everyone is selling the same stocks. Okay, and the same stocks, of course, would end up being the high flyers. So what ends up happening is that you take the tick, you take the arms. You want to see the arms, and what's so cool about this with the arms, here, let me show you something for a second, because this is really cool how this shakes out. So when you take the arms, you know that, well, you don't, I'm giving you how this works in a technical sense. But I know from basically doing this for so long that there's this 2, you get 2, 3, 4, 5, you're at about 6. This thing won't bottom until it's around 8, 9, 10, 11. Actually, 2, 5 to 10. Yeah, you're talking a good 8.5 to 10.5. Then what you need, and you need this also, is that you need a rejection of lower price. You get all three of those, that's when you'll get yourself a good bounce. You know, that's how she shakes out. You know, and bottom line is that lower prices are coming at us, and I expect coming right into this close out here, what you're going to see is you're going to see lower prices. Why someone got to step in the middle. And what has happened, and it started even from this morning, and I brought this up in the morning show, I could see that people were scared to sell into it. Bottom line, that's an indication you're going lower. I could hear everyone thinking they're going to have a bounce. That's a great indication you're going lower. Bottom line, folks, the market's going to squeeze everyone. Have a great one. No, stay right there. Come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow off 444, Nasdaq's off $149. You got the S&Ps down 48, and no doubt you get some damage in this market in a big way. And what I do expect you're going to see here, because of the fact that we've had so many bounces for so long, there's plenty of folks that bought intraday out here, and as we come into this close, they're going to have to close the positions. That is going to, accelerate this downward move. That's the first part. The second part is actually a little bit more intense, And what the second part would be has to do with the aspect of when you get a 2-day route like this. Hey, I'll start with a 1-day route first. With a 1-day route, no matter what contract that you'd be trading, meaning inside the, let's say if you're inside the futures market, if you're inside the E-minis, guess what? It's a $5,000 margin. You're down 50 points. That's 2,500. You're gonna have to close out at the low. Okay, that's the first one. If you're dealing with the E-minis, I mean on the Nasdaq, what you're dealing there is that that's even actually more intense because we're down. That's 2,000. That's 3,000. It's 3,000. So the Nasdaq, you put up 3,900, and if you had bought that contract, you're down 3,000. So what we suspect you'll see in here is as we get closer into that close, don't be surprised by a very fast downdraft coming into that close. So it's not going to be cheery here at all. And, you know, it doesn't matter what indices you take out here. What it was intriguing here is, let me show you something here. This was really intriguing intraday. If you were trading out here intraday, it was a trader's, well, it was a trader's paradise, no doubt. But that's, I don't even want to get into that because it's, I know most folks aren't trading out there. But our bottom line is that if we looked at the small caps, what had happened is this, folks, is that the small caps actually start coming back, and they got positive. Like when we look at the IWM had a low out here of 114 today, 114.37. It does a counter trend bounce, and it comes back, and it fills the whole gap. At 2 o'clock this afternoon, it was at 116.66. It's like, man, oh man. Does that mean, so, you know, the probability there was like, oh man, you know, the market could have had a chance to come back. Now, as that was happening, the S&Ps, they couldn't get any traction. The Nasdaq couldn't get any traction. And it's like, man, this is going to be a trip watching, you know, is the small caps, you know, going to basically come back downtown, or, you know, is the small caps going to basically save the market? Well, bottom line is that once it filled that gap, that's all she wrote. That was the end of that whole deal. You know, so what you've also done here is that if we look at this here, let me bring up the NYA, because the NYA yesterday was telling us that, guess what? This is going to be the first indice. You know, we've already had the sector hit it. This will be the first indice, though, that broke. Oh, okay, sorry. This is the first indice that broke and is going to go after the October level. And I think we got it. What a trip. Yeah. Okay, so check this out. The October 2014 level I was talking about, the NYI not only has it, it's blowing it away. So now watch what this sets up. This is going to be sick. What this sets up is that we're at 10,239. 10,362 was the high of the October 2014 level. That sets up 9,800 now, because you're way too deep into it. We're already into it by 120 points. So bottom line, it's trouble in paradise. Now, folks, let's go over to our man, Mr. Steve Rhodes. And don't forget, folks, every trading day you can listen to Steve. In fact, you know, we start program here at 8 o'clock in the morning. Go to 8 to 6. Get it right on your cell phone at tfnn.mobi. Steve has a great program, 1 to 2 Eastern Standard Time. Every trading day. Also has a great newsletter. You can go over to our website at TFNN, go to newsletters, go to trading newsletters, see Mastering Probability with our man, Mr. Steve Rhodes. What's going on, brother?
What's not going on, huh?
Oh, man, I'm telling you.
You know, what's really interesting in a couple of different things that you were touching on, I really did not believe that the October lows would be taken out anytime soon. And the reason, you know, one of the charts that I'm showing right now, it's a cool indicator. Marty Zweig put it together a bunch of years ago, and so it's not an indicator that you're going to be able to find on any trading system, to my knowledge, anywhere. And it's something that I manually keep track of, and it's a ever since it was designed, every time we've got one of these Zweig breath thrust signals, it has formed a major bottom out here. And the last one that formed was in October. The October 2014. This is a New York Stock Exchange chart that we're looking at out here, which, as you said, it's truly gunning after those lows for sure. So, historically speaking, and using this which has been a really great identifier of major bottoms out here, we're going to be in uncharted territory because there's just not enough of these. There haven't been any that have broken out the bottom. So to me, that certainly is a message that is troublesome for the markets out there.
Okay, so you're saying that when one of these get made, it's never broken out of bottom?
Yeah, absolutely.
Wow.
Yeah, that's why I have been saying for so long to folks. Many people don't necessarily know the reason why, but now that we're there, I'm going to tell folks the reason why is that every single one of these Zweig bottom signals, major bottom signals, it has never failed. Now, back in 2004, there was by one day it missed giving a confirming signal, and the 2004 low was tested, but rejected, just like you were talking about with regard to trying to find a major bottom and going ahead and utilizing the trend and so forth. So it was tested and was rejected. But in this case here, we're not anywhere near the end of the unfavorable seasonal cycle. That doesn't really take place until October, which is when many of these signals actually form out here. So with regard to this specific signal, we're really in uncharted territory. But to me, it's bad news. Just simply, it's kind of like, remember back in 2007, I think we had a big thrust down, and it happened to be one of the celestial days out there, and the market went ahead and moved higher, bounced off a low, moved higher, and then when we finally broke that was a signal that the market was going, into major nasty territory.
Yeah, no, it's really important. I remember that really well. Right.
Yeah. So to a certain extent, this happens to be, it's not based on celestial planets or anything, but it's based on a tool that has. Bottom line is every single major bottom has never been broken. And so that October low is really important out here. And I think the market bounces. The trend, the way that you're talking about it, we can always use these tools differently, but the trend, the way that you're talking about it is to set one of those really significant bottoms. What I've got up on my screen here is just simply shows you that 86% of the time, just in the last year and a half alone, if we get a close above 2 as on the trend reading, we've seen at least a bounce out there. It's a bounce or a bottom.
Just stay right there, Steve, all right?
Okay,
awesome, man. Steve Rhodes, Tom O'Brien, we want to hear from you folks. Our phone number is 877-927-6648. Dow's down 480, Nasdaq's off 159, S&P's down 52. Steve and I are going to be coming right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We get the Dow down 438, NASDAQ off $146, S&P's down 47. We're talking with our man, Mr. Steve Rhodes. And don't forget, folks, you can test drive Steve's newsletter by coming over to our website. Go to TFNN. Go to newsletters, go to trading newsletters, you see Mastering Probability. You can test drive that 1 month absolutely free. Okay, so I'm looking at your trend chart here.
Yeah, so the top portion is the trend, and it's just that blue squiggly line.
Yes.
It's just showing the closes. So what's key is the close. I don't really care what the intraday spike is to the high. It's really all about the close. And this chart goes back 2 years. And if we get a close in the trend above 2 today, what it would say to us in the last 2 years, there have been 19 such occurrences. And 16 out of 19 times, or 84% of the time, you've seen a bounce or a bottom in the market. So it doesn't work 100% of the time, but it works good enough that you should pay attention to it. Now it's a different way to use the tool, and it's about identifying bottoms differently than what you were referring to. When you're taking a look at
Yes.
your set of formula out here. But this really helps to. It helps people to really anticipate what the likely next move is. Somebody that's short, that's in a position that where they sold at the high, they can anticipate what's coming next. Doesn't mean it doesn't mean you move out of the trade if you're in at a good spot. If somebody were to have jumped on intraday today, they're not in the same position as somebody who was short from Tuesday afternoon.
Yeah,
So
I hear you. It's interesting to me from listening, basically all day. 2 different things end up happening. I think you might hear people were scared to go short, which was awesome, and bottom line, they were scared to go long. That tells to me, put the pedal to the metal, man, because it's just
the pedal has been to the metal.
I understand that, but that's my point. Do you know what I'm saying? That the bottom, when that happens, you're going a lot lower, man. So it's people think we're down. We're still not even down that far.
No, really, we're not. Actually, the NASDAQ composite itself has not even broken its trend line. And there's really 2 of them out here. There's a trend line that we can use coming off of the November 2012 low.
Yes.
And if you just use that and you touch the October 2014 area, the composite has not even touched the trend line. So, there's a lot of... So to me, it is... the market is just doing a retracement here at this stage of the game. But it's coming into a very difficult selling season out here. And, so some of these other tools or indicators that we're looking at are not necessarily good. I'll show you something else if you'd like. Now, this also has got that horizontal support, a horizontal trading range boundary, line out here. But this is something, I don't know if you're familiar with this, but it's another way to use volume. And one of the things that I had noticed inside the market was, is that if we take a look at, actually, let me just go back here. If I take a look at all of, this is the Qs out here, and the Qs have this really interesting behavior in that if you go back many years, what you'll find is that all of these high volume days at bottoms have been just that. They've been bottoms that haven't been tested.
Not all of them. I understand what you're going to say. Go ahead.
Not all of them. But anyways, what I had noticed is that the volume characteristics started to change about a year and a half ago, and I couldn't really figure out why. What was really going on out there. So I got in touch with the folks over at the that manage the QQQ ETF out there, and I got what all their outstanding shares were by day. This is the decline in outstanding shares inside of that ETF. Now, I haven't updated it for a couple of days out here, but, it has really been in you'll talk about being in a bear market. Just take a look at the outstanding shares available inside that ETF series. So what I did with that, Tom, was I just simply said, well, I've got to take a look at volume a little bit differently. And so I take what the end of the day volume is inside the Qs and just divide it by the outstanding shares. And I just have this little line of demarcation out here. I know there's a bunch of lines because this one chart that helps me identify when there's bottom worthy conditions as well as top worthy conditions, and we're up about as high as we have been. We're up as high as we've been, not at the same highs that we saw as a percentage of outstanding shares back in October of 2014. And I'm not calling for a major bottom out here, but just another indication that, in my opinion, we can anticipate a bounce inside the marketplace out here. And there's another thing that's taken place. Today is going to be the third day in a row where the VIX index has had a one-day rate of change of greater than 10%. There's only been two other times in history. Now, when I say history, the VIX index came on board in 1990, January 5th, 1990. So we've got 25 plus years worth of data out here. Only 3 days, which is kind of amazing. Only 3 days in a row have we seen a greater than 10% percentage rate of change close. And the other two occasions, one was in 2004, and that's what we're looking at right here, or 1994, I'm sorry, March 31st and April 4th. April 4th actually was a fourth day in a row. Now, what's interesting is that actually set up a major bottom out here. And then the last time that we saw it was on October 13th. Now, October 13th, 2014. Now, obviously, the markets move lower for a couple of days out there, and maybe that is what occurs, again, by testing some of those lows, like inside the New York Stock Exchange out here. But it's just another signal that says, in my opinion, these signals suggest that we should anticipate a market bounce. And we're going to find out soon enough whether or not that actually happens.
There's no doubt. There's no doubt, man.
So just using tools and going back. Look, the name of my newsletter service is Mastering Probability.
Yes.
To me, it's about just really going back to take a look at the charts, turn off all the noise, don't and just go look for the patterns out there. And these are different patterns. Most traders, when you take a look at the tool set available in all of our charting packages, between retracements, A, B, C, D patterns, moving averages, and so forth. It's good to have an extra set of tools inside your toolbox that help you to navigate what the markets are doing out there.
There's no doubt. There's no doubt. And putting a few of them together is crucial, right?
Yeah, it is. It's been, well, look at it. What a great week. Gold. I know you got your subscribers into gold. I've had mine in since we almost bought the bottom. We didn't buy the exact bottom tick, but really close out there. And what a nice move that we've had inside gold itself and the mining equities. So there's more than one way to skin a cat in this game.
And that's what you just said there. That's, folks, take that to heart, because it's so crucial to understand that when you're in the market a while, you got to learn how to move in the market. And that's what Steve's talking about. Do you know what I'm saying? So the bottom line is that, and that's where the probability comes in, that, what is the move? Is it going to take place? And it's nice being in a couple different places, man. And
you couldn't find anybody weeks ago. I mean, I'm sure everybody was trashing gold.
Oh, I loved it. I know, believe me.
There's like no way. There's like no way. And I'm putting in my newsletter service. I'm showing everybody. Now, there's a certain set of signals which I haven't shared here, that I share with them, and it said, look, here's a set of signals. Here's the probability of how it works, and here's when it calls a bottom, and here's when it tells us when it's ready to take off.
Right.
And sure enough, it worked. it worked just like that. We just and use stops. You just use those probabilities. Look, there. We had tried buying a bottom in gold probably about 4 or 5 weeks before that. And got stopped out.
Yeah, that's
but
all
that's
right.
that's the game. Yeah. And it's like light sweet crude. When are we going to see a bottom?
Oh man, I know. I can't wait.
Yeah, me too.
I looked at it today and I said, no, man, I'm going to still wait, and I'm glad I did, man.
Yeah, I know. I hear you.
Cooking, brother.
All right.
Hey, thanks so much, man. Have a great weekend. Have a safe weekend. Look for the show Monday.
Thanks, man.
You stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You get the Dow down 450, Nasdaq's off $1.50. You get the S&P's down 50. This is going to be a trip, folks, because this Dow is going to try to make down a 500 day, okay? And I don't remember a 500 day for a long time, up or down, but it's going to make the run for it right now. So we'll see where that baby does shake out. If we take this, let me get to the high of the Dow, because the same setup, the benchmark out here is that the beginning of, it's the highs of the lows. But it looks to me like now what you're going to do is that you're going to go after the actual lows of the October 2014 area. And on the S&P, this is a long way down. Let me get this on the Dow for you first. So on the Dow, the high of the low is 16,000. Oh, we already hit it, man. This is unbelievable. Even though I know that's where it wants to go. What a trip. Okay, so check it out. This brings the probability up dramatically, folks. that the S&Ps are going there. So check this out. The October level that, never thought I'd hit it in a week, but anyway, the high was 17,000, no, 1 second. Yeah, the high was 16,602. That was the price projection that I felt the market's going to go to, period. Okay, so we're there, but we're already over 100 points into that. So what does that set up? That sets up 15,855. That's another $700 down. That's how that sets it up. Now watch this, though. This is the scary part for the S&P. Because the S&P, we are at, let's see, 1980 right now. And on the S&P, the top is 1912. The bottom is 1820. So if the Dow goes to the bottom, the probability with the S&P is going to go to the bottom. We're at 1980. The bottom is 1820. So that's another 160 points down. If we go to the top, you're talking about what, let's see, 1070, you're talking 68 points down. Probably one day. Problems in paradise all over the place here. If we go take a look at the NDX 100 as to where that number is, let's see. I'll go like this. Let me put this one up for a second. Okay, so NDX. We put the NDX up. We're at 4208, down $1.75 now. And this is a nasty one, too. So we're at 4212. 3893 is the high of the October low. 3700 is the low. So that's, if you go to the highs, okay, you're talking, what, 103? You're talking about 300 and, let's say, 20 points. If you're talking the lows, man, oh man, you're talking 500 more NQ points. Okay, big numbers, folks, big numbers. So bottom line is that I hope you have the stops in because, you know, this thing is, I suspect it's going to be pretty nasty Sunday night. And of course, this is the time that if you're a trader, make sure that you get a good rest over the weekend and be ready for Sunday night because this is going to be fast, furious, and all of the above. And as we're coming into this close, this thing is breaking pretty hard. And I expect it's going to break harder because the bottom line is that you have a couple different things happening. You have folks that bought this morning that have to sell out. The selling from the broker-dealer community of selling people out is happening, you know. Fast, furious, all of the above. You stay right there, folks. Dave White and myself, we're going to be coming back for the next hour. Dow right now down 509. NASDAQ off 161. S&Ps are off 55. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You get great guests. And
well, listen.
Keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF. Got my man, Mr. Dave White, with me. We're growling and prowling with you out here. We're going to talk markets and we're going to talk some technology. Dare to believe. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, guys, let's take a look at it out here. We had the Dow finish down 531, NASDAQ off 171, S&P's down 52, gold contract up 550 at 1,158 an ounce. Silver down 26 cents at $15.25 an ounce. Platinum down 8 at 1,023. You got copper down 2.5 pennies at 2.29. Light sweet crude, just can't find the bottom. It was down $1.50 earlier, down 97 cents, 40.35. Oil, folks. Looks like it's going after that $32 to $35, which is a total mind blow. Isn't that crazy?
I was looking for the ladders when I drove over here today. No ladders. They were leaving it at $2.25 a gallon.
$2.20. It's going to go down. We'll go through the gasoline too. Bonds, 10-year up 12 ticks, 128.23. 30 up 10 ticks, 160.13. Bottom line, both of those are going after their April highs. We'll see how they approach. They're approaching those highs with conviction right now, folks. King dollar's down 1,000 ticks, 94.95. That baby's going after that June 18th swing low of 94.40 to 93.30. Euro up 126, and the yen down a penny and a quarter. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. So the world of the S&Ps, folks, let's take a look at them. What do you have? Nasty day, nasty week, nasty all above. Bottom line, what the number that we've been talking about here is getting hit and fast, furious, and all of the above. It's pretty amazing, actually. Okay, so the SPYs, I'll use the SPYs because I know plenty of people have them. The SPYs are at 197.63. We did volume out here. Check this out, of 320, is that right? 326,000 million? You got to be kidding me. No, that's a weekly. Yeah, we did 326 million shares, okay? That's a total mind blower in itself. Well, anyway, the highs of the lows of the October level is 191. Bottom line, maybe we'll hit it Monday. We take a look at the NDX 100, the 3Qs. What do you have with the 3Qs? Bottom line, 3Qs are trading out here at the 102 area, 102.50. The 3Qs did 92 million shares. The 3Qs, folks, have a long way to go down before they even hit the top of that. It's 94. Right now we're at 102. If we take a look at the Dow Industrials, so what the Dow Industrials have done is this. Yesterday we were talking about the NYA, the NASDAQ, the New York Stock Exchange composite. That baby had gone after the October level yesterday. Well, guess what? It not only went after it, it basically ripped it apart. So now what you have is this, and this is now the highs of that level that we were looking at is 16,602. Well, the Dow closed down 530 with 16,459. That's saying the Dow's going to 15,855. So $700, 700 more. It's pretty intense. And as I said, the first one, and I'm going to bring this up for all you folks that are sitting in your car, and you might be just tuning in right now, the biggest danger, not the biggest danger, it's bad enough as it is, but if you don't have stops in, folks, okay, and you're in these S&P stocks, we're still a long way away from the October level in the S&P. The cash S&P is at 1977, 1975. The high is 1912, okay? So that gets you down, what, another $65, 63. We're down 60 today. The low, though, is 1820. Big number. Big number. And the bottom line is that you had the volume, all the indices, everything. NYSE did 1.3 billion. On the NASDAQ composite, what you did 2.7 billion. Where what is problematic in a huge way, and this is what it is. I mean, the whole world looks like they're looking for a bounce, which is pretty amazing. But guess what? 2 days down, I don't see a bounce. Why I don't see a bounce? Okay, so check it out. The Dow is down 3%, NASDAQ was down 3.5%, S&P's down 3%. But if you're watching my screen, even if you're not watching my screen, I'm going to walk you through the world. So Shanghai was down 4.2 last night. Hang Seng was 1.5. Nikkei was 2.9. They're going to open the market up Sunday night. They're going to gap lower. We go to Europe. What do you have with Europe? Bottom line in Europe, you had the FTSE down 2.8. The CAC Carol was down 3. The DAX was down 2.9. It's like, why can't you gap lower again? No reason you can't. You know, and if we take a look at the, we got the first real major downtick happening. Okay, you get a downtick of minus 1457, and what that means, folks, is that simultaneously you had that many people selling on the bid inside the NYSE. If we take a look at the trend, what you have inside the trend is that we're about 2.8, I think. Yeah, 2.8. Well, for one day. You need, on a 5-day basis, man, that thing's going to be running 11 or 12, and you're not even close to it.
But in bear markets, it's not uncommon to get wild 30% corrections in one day, and then of this move down that we've had in 3 days, and then give it all up, maybe even the same day.
That's right.
Okay, so the one thing you have to understand is that 50% correction, or the 382 correction or anything, you can get it in 2 hours, and everybody will think it's over. And just like today, where you were talking about the IWM,
right,
it goes right up, and boom, you're right back out.
Yeah, no doubt, no doubt. And what I'm digging more than anything right now is that I saw it this morning. People were scared to go short, which is like, oh. And people would think, oh, there's bounces everywhere. It's like, you know, and those indicators, and those, you know, as I'm going over this, Dave knows Tim Ward really well.
Yeah.
Those indicators, okay, that tick indicator with that 5-day trend, okay, with a rejection of price, man, is so clean at the bottoms. I mean, Tim and I have killed the market on that.
Right. If you want to buy a medium-term bottom, but not one that is maybe over an hour or 30 minutes.
Oh, yeah, no,
yeah.
My point is we're not even close.
No.
Right.
But you can get those wild pullbacks and then a retest of the low.
Listen, I was long and short today.
Yeah,
I played the bounce. I was saying to my son, I shot up the yin-yang, I played the bounce, I got the bounce, and then I'm shot up the yin-yang again, and he's looking at me like, I can't believe you're doing this, man. It's a beautiful thing. It's Tom O'Brien, Dave White. You stay right there, folks. We'll be coming right back. Dow is down 530. NASDAQ was off 171. S&Ps were off, where are we, 54. Dave and I are coming right back, folks. We'll talk some technology.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. We appreciate you growling and prowling with us out here. We had the Dow finish down 530. NASDAQ was off $171. S&Ps were down 55. And don't forget, folks, every trading day we start live programming 8 o'clock in the morning to 6 in the afternoon. You can get it right on your cell phone, TFNN.mobi. Dave does a great show every trading day, 2 to 3 Eastern Standard Time. He also has 2 newsletters. You can test drive these newsletters by coming over to our website at TFNN. You go to newsletters. One of them, you're going to go to investment newsletter, and that you can test drive the Tech Insider 30 days absolutely free. And we're going to talk a little bit about the Tech Insider right now because of the hammering these things have got, right?
I'm finally looking at getting bullish at some of these stocks, all these things, especially these super hyped stocks.
Okay.
We talked a little bit about it maybe 2 weeks ago.
Yeah.
Where we were talking about Amazon.
Okay.
Was in the moon in 2000.
Yep.
Came down 90%.
Yes.
Finally, the hype was over, and the stock had the kind of 10-year, 12-year, or 15-year run you look for. Finally, when all the air and the hype is blown out of these stocks,
yeah, right.
You can buy them and get into these. Even Apple split adjusted in, I think, March of 2003, was less than $1. So it wasn't like these stocks have always been great and just went to the moon and grew higher. Almost all these super stocks that have great long-term possibilities have enormous amounts of hype. And, you know, everybody's talking about eyeball clicks and everything other than them
really
making money, right?
I know, right.
So when they finally come down and all the air gets blown out of them, it's like the 3D stocks. I'm finally looking at these things maybe over the next month or two where they might be in some level where you can actually buy them.
Which is dynamite, yeah.
And these things are basically now selling maybe even less than half the real value, which is great, but means they even can go lower.
Oh, no, totally.
So
No,
I get horrible markets like this.
We know that the cool thing, folks, is this, is that if you get equities that you like, right, and you get downdrafts like this, what you basically want to wait for is a trashing. This is going to be a trashing, you know what I mean? That's the bottom line. And then you try to get in as close to the bottom as you can.
Right, but I have a feeling a lot of people are probably going, well, I wanted to buy a lot of stocks for long-term holds and everything else.
Yeah.
Well, the long-term holds happen when no one else in the world would even think about buying that particular stock.
There's no doubt. There's no doubt.
And what we've had is this horrible market.
Well, I heard you on your program today. Be careful what you ask for.
Yeah.
People, money managers were asking for this. Now, guess what? They don't want it.
Right.
No one wants it. You know, that's the bottom line. So
it'll do it, but you're going to get opportunities, and everybody around TFNN will remember probably March 9th of 2009.
Yeah.
Or March 5th of 2009.
March 10th.
Yeah, well, I think mine I bought on March 9th.
Yeah.
But it was probably pretty close. I bought stocks, not indexes.
I'm just saying that was the bottom. Okay,
right. But it was right in that area.
Yeah.
But there were stocks in there that I bought that were testing the lows with 10% of the volume of previous lows.
Right.
And, those...
No more sellers.
There are no more sellers, but you also, even in the medium term, are making monstrous money with those kind of holds. And the idea is once you get those, you can sit on them for a long time because you've got a lot of cushion down below.
Right.
It's not like now where, one day someone says something is better about the stock and suddenly you're blown out of your stock.
You know what's so cool
You've
about
got staying power.
You know what's so cool about this conversation?
What?
We're not even close to a bottom.
No.
You know why, folks? Okay, this is what. That's how we started the program up. People talking about bounces, right now. You're talking about, these buys are here. Guess what? Give me your hands. Put those in your pocket.
Oh, I know that. I've already put. There's a lot of gaps, and I put big arrows to them in the newsletter this morning, saying this is down here, right?
But we know how this goes. When no one's talking about buying anything, that's going to be the low.
Well, there's stocks that, like I talked about in this conversation already, that were $97 a year ago.
Right.
They're $12 now.
That's
so
intense, man.
if they're going to get a lot more squished out, maybe it's $5, right?
Yeah.
But either they're going out of business or they're going to find a bottom and they're going to be fairly decent. But if this market, we were talking about it before the show, about how this goes back to like 97 and 98 and the whole competitive devaluation issue.
Yes.
And back then, it took, you said, I think that even the beginning of it took 3 months.
It did.
And
it did.
This took 3 days.
Yeah.
So we've got a lot of compression, not only in the price and margins, but in time.
No doubt. And what's going to happen, unfortunately, in compression in time, is that there's going to be a huge amount of selling by the broker-dealer community, selling people out.
Well,
because what you're going to have here, folks, is that because of the fastness of the move lower, if people were concentrated in a couple stocks, well, there's a couple stocks that are down 10 or 20%. You're in margin. Guess what? It's going to be close to a margin call.
Well, you were talking about Tim Ord. Like him.
Right.
He had one theory that I've kind of subscribed to for a while.
Yeah.
And that is, if you come down on light volume, you can have a V bottom.
Yeah.
You come down on heavy volume, you got to consolidate out.
Right.
So whatever you want to do, don't be thinking about a V bottom, thinking about more about a U bottom.
Right.
And that may be 60 days, it may be 6 months.
Yeah.
But it's not, like you said, we could get a 45-point rip in the S&P in one day.
Oh, listen,
but that doesn't change a trend when you've blown it apart as bad as you have in the last few days.
And in order to get that, you still have to get a couple of vicious down ticks and
but you're going to get
a trend that goes pretty dramatic.
Right, but you're going to get a parade of elephants on CNBC telling you that everything's over, right?
They lost control. Doesn't matter.
Yeah, I think they did.
Yeah.
But they're still going to be on there.
Yeah.
Yeah.
Oh, well, the funniest one, did you hear him this morning? And folks, this was sad. So they had a trader on from the CME, and, you know, that's the Chicago Merc. And listen, they trade back and forth every day. This trader comes on, and they ask, well, what do you think? He says, oh, well, you know, this is where the interest rates are low, the gas prices are low. You know, this is like, you know, this is really good. Like, it should be good in like a couple of weeks, or maybe like 6 months. It's like, really? And the ironic part about that, folks, of course, is that, you know, a money manager can say that. But when I heard that this is supposed to be a trader, I'm saying to myself, oh my God, this is the sad part about that is that there's plenty of people, unfortunately, don't understand. Anyone from the CME, folks, okay? That's their job. Their jobs go in and out every day. You know, they don't think 2 weeks. 2 weeks is like 8 years to them.
But at the same time, a lot of these guys, and I always thought about it like this. If someone said they had a brand new Lincoln Continental down in the garage, and they'd sell it to you for $100 today, what are you expecting? Probably something got burned or Molotov cocktail.
Yeah, well, that's a lie, right?
Well, yeah. But that's why stocks, everybody goes, well, this stock is incredibly cheap.
Right.
Well, there's probably a reason why it was incredibly cheap, right?
There's no doubt.
It's like the $100 Lincoln car. There's a reason for it.
Unreal.
Anyway.
So let's talk to me about this. Google has has given Hangouts a brand new home.
Right. It is a bigger kind of thing that I'm talking about, and in technology, it's called atomization.
Okay.
But it is kind of spreading across the internet, and Google's now really into it. But instead of having one big program do everything, they're taking a lot of these programs that had a lot of stuff and busting them apart. We're going to talk about Facebook too when we come back. But it's called atomization. We'll talk about it.
Stay right there, folks. Dave White, Tom O'Brien. We want to hear from you. Our phone number is 877-927-6648. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Okay, so we're talking about Google, what they're doing with their new Hangout.
Right. It's just a bigger thing just because they did it today. But even Facebook.
Okay.
They continue to take out, they have a thing called the blue screen, which is where they have most of their features if you've ever used it. But they continue to take out little features like the instant messenger out of it, and they're putting it into another app for your phone. And so all these things that used to have a ton of stuff in them
Yes.
are now getting what they're called atomizing them. They're taking everything down to the basic parts, making those parts work together, but taking them apart and making them very simple for each individual item. But Google has a thing called Hangouts, which is like Skype.
Yes.
But it's kind of a little different, and then you can put a lot of people on it.
Okay.
So if you want to have like a meeting, or you want to do a YouTube channel where you talk to 6 people
Yes.
all at once, works pretty good. The problem is it was so embedded with stuff that I couldn't figure out how to get into it.
Okay.
Or I didn't want to spend the time.
Yeah.
I spent 15 minutes, never figured it out, never went any farther. But that's people are now so focused on having maybe 2 or 3 options that they won't go any farther. And most of these programmers and the big companies are breaking their programs apart. And
because we're using our phones so much, right?
Right.
Yeah.
But at the same time, the idea used to be that you would control everything if you were Facebook. Instant messaging,
I
right?
see.
You do that.
Yeah.
Well, people won't do that. So actually, maybe instant messaging from Microsoft and something from Yahoo and Google over here and Facebook
I see.
over here.
They're figuring they got a better chance breaking it apart, of getting our attention. Yeah.
Right, because what they're
That makes
figuring is
sense.
a lot of people just won't use it because it's too complicated.
Right. No, I'm with you.
So it is coming apart. Google is basically taking everything that they have apart and making it individual. So Mail,
Yep.
Google Hangouts. Every little piece of it now is going to be a separate new app on your phone that you have to go find.
Which, in the long run, too, they can make more money on because they can put something
Adds a
on
different
each and every one of them. Sure.
But
Right.
they also drop the complexity, which is the big issue that a
Yeah.
lot of people are having. Just thought it was interesting.
Windows 10 and gaming.
I brought this up a little, and I can't remember if you were here this week or that week or not, but if I think I brought it up. More people, or let me put it this way, more kids
Yeah.
that play games are watching live gaming, and I mean like computer games,
Right.
live streaming,
Right.
than people are watching sports on ESPN.
Wow.
So
That's amazing.
One of the big features that Windows is doing now is the ability to live stream anything you have on your screen, but it's really for games.
Okay.
To another Xbox or another one, and they can do it now. They had an update this week at 1080p at 60 fields per second, but the whole game business out there, in fact, I saw
Huge, right?
the prize for some game competition last weekend, and I don't play that particular game, so I don't really care, nor would I watch somebody else play a game that I want to play. But apparently young kids do. Guy won $250,000 for winning the championship on this game in Seattle.
Right.
So it's big money for the participants.
Yep.
And and it's a big thing for kids. It's kind of like I don't understand all the time being on Facebook. That there is a big segment of especially 13 to 20-year-olds that have moved off Facebook and are going on these live gaming, live streaming things.
Right.
So
no, you know
things
what's
change.
interesting? You just brought up a great point because what happens is that sometimes I think, how can people stay on Facebook so long? But then I crack up. Well, guess what? I'm on a computer trading 10 hours a day.
Right.
So, we all have these different torques. I'm sure plenty of people say, how the heck, what are you doing, man? Do you know what I mean? It's like, believe me, I understand. It's like, okay. Bill Curley, who is he?
He's one of the biggest venture capitalists in California.
Okay.
On Sand Hill Road, if you've ever been there.
No, I haven't been there, but I've heard of it.
Okay.
Yeah.
Anyway, he had a tweet yesterday. Investors are likely to refocus on business model viability and a path to profitability. This will seem like an abrupt sea change to many.
Right.
If so, we may be nearing the end of a cycle where growth is valued more than profitability. It could be an inflection point.
Right.
Which goes back to our point a
and
little
you being in
earlier.
the tech business, you know that. What happens, folks, is that the way tech seems to go is that you get everything going. The venture capitalists will put huge amounts of money into companies that are not profitable, and then all of a sudden this happens, and then it's over. Overnight, it's like, what just happened?
And then you mean eyeballs don't make money?
Yeah, exactly.
We've actually got to sell advertising. We actually have to make money.
Right.
And the burn rate, well, there's no more cash in behind this company, so this company is burning $100 million a month.
And they're gone.
And
Yeah.
they're gone tomorrow.
Right.
Now, I've looked at it, and I've got a play that I'll be looking at long term, but the biggest housing, or let me put it this way, the biggest real estate bubble in the world right now is in San Francisco.
Oh. You got, folks, if you haven't watched, this is what you want to do. I was last night, the night before, I love HGTV. I mean, so there's a program on there, and it's the $1 Million List in San Francisco. Oh my God. They're crazy.
They're insane.
There was a bid the other night, so check this out. There's a bid that guy wants $3 million for his place, folks, right? The broker gets him a bid $175,000 less than that. The guy is sitting at the table saying, I'm not going to take it. He didn't take it. It was like, you got to be kidding me. And then the broker saying, he's pulling his hair out.
Yeah.
There's no doubt.
But that goes back to sell when you can, not when you have to.
Yeah. And could you? I couldn't imagine not. And it was plenty of profit. It was just that was a good bid.
Anyway, I'm looking at some plays that I will probably put in the newsletter, but there should be significant downside to especially real estate around that .com bubble in San Francisco.
Oh, interesting. Yeah, because what you have there, folks, and I know San Francisco really well. So the different neighborhoods there's a couple neighborhoods that definitely. Well, it's commercial. It's probably commercial property you're talking about. Yeah, right. So wild.
Well, I remember there was a guy that you had on. I can't remember his name, but it was around 2000. He left and went to Seattle to buy a bunch of real estate after everything blew up.
Okay.
You remember the guy?
I don't.
I'm trying to remember.
No.
I can't remember his name now, but he was a host.
Okay.
For some times when you weren't on.
Interesting.
But he went back up there to Seattle and bought a lot of real estate just after everything blew up.
Yeah, right.
And, of course, he was busy selling it back in 2006 and 2007 back at the highs. But Silicon Valley, if it hadn't done anything, it's been boom bust since day one.
Yeah.
So it's interesting. Anyway,
and the good news is it always comes back bigger.
Yeah.
Intel
basically showed their new 6th generation CPUs this week. And what is interesting is these new laptops will be available probably around the 1st of October.
Okay.
In fact, these chips, it's almost getting ludicrous now. This one will run 3 4K resolution monitors all at the same time in a laptop. They've got...
How cool is that, right?
These things are becoming small supercomputers.
Now, are they really expensive? Or
they're going to be really expensive is relative. If you're talking an extra $50 compared to the one that came before it.
That's it?
Yeah,
oh my God.
it's not that bad, right?
That's sick. Stay right there, folks. Dave and I are coming right back here. The Dow finished down 530, NASDAQ off 171, S&P's down 55. Bottom line, folks, you broke swing points, broken with volume. If you're looking at charts over the weekend, go look at the October 2014 level for, that's where we're going. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Let's go to Rich in Oregon. Hey, Rich, what's going on?
Hey, thanks for taking my call, guys.
Sure.
I know Intel is big and nice and everything, but I was looking at Franco, Nevada here. Where would you enter this now?
So
if people actually want to own something.
So you get Franco, Nevada, folks. Franco, Nevada is a royalty company. The low is 38, the high is 58. I happen to own this right now. So Franco, Nevada is an ABC structure on the way up. The key here is that, you know, your rate point on this is the 39. Your B's up at 47, so you get $8. The target is 51. I'm just ballparking it right now. You know, if this thing can get down to, 45, 41, you could buy it there and put the stop into 43, and you're going for 51.
Okay.
Cooking, brother.
Thanks.
Have a great
Have a
one.
good weekend.
You too, man. Have a great one. Have a safe one. So now if we go back, we're going to go back to tech here, folks. Bottom line, if you are in the metals market too, by the way, folks, okay, that thing, some of the equities gave up price today, but they're all pushing with volume. They're going higher. So we're talking Intel, yeah.
No, I just wanted to bring up, they've got this is a horrible market for all this stuff.
Yeah.
But they've got new products coming out. That'll be out in October. One of the interesting thing is these new chips have a thing called a digital signal processor built into them.
Okay.
And they can run that DSP on very, very light power. Almost nothing.
Yeah, which is huge, right.
Well, here's why. You know, we talked about Cortana and talking to your computer and everything. Well, you don't even have to turn your computer on anymore. With these new processors, you can just say, hey, Cortana, turn on my computer.
Ooh, I like that.
It's going to turn on. It can be, you don't have to have it on. I know people have security and privacy issues.
Sure.
But you can turn that feature on so that you don't even have to get to your computer. You can just talk to it across the room, turn it on, turn it off, do a bunch of other things. There's going to be some other features that are also that they haven't talked about. But
it's a brave new world, baby.
It is. And like you said, maybe you don't want to own Intel today, but still a monopoly.
Oh, yeah,
which
we want to
and there'll be one day that you do.
No, totally. I definitely want to know. Rollout dates. Microsoft's next Surface in early October.
That's going to have the new chip in it.
Now, Surface is like their tablet, right?
Right. But it's the one that you pull apart.
That's right. Oh, that's right.
With So it's a tablet.
Yep.
It's a notebook.
Right.
It's both things. But I just didn't want to bring up because even though we've got some fairly strong markets right now, September 9th, you're going to see Apple. It's going to have its PR engine out.
Yeah.
If you're thinking it's going down September 9th, that would probably be the worst time to be shorting it.
Okay.
Right, compared to probably between now and then.
Apple got a big bite taken out of this
Got down to 106 today, and it blew through the 108. It did it with volume today. I've been talking about peak smartphone for a while. We talked about over the last 3 or 4 weeks, been talking about how poorly the suppliers have done.
Right.
And that the key, when it blew apart, before it split at $700,
right.
Which was, September 29th of 2014, because I think I did it on the air and I remember it now.
Yeah.
But at that point, same thing happened. And if you're playing Apple, I think the best thing to do, at least the last 2 major blow-off tops, have been telegraphed into those suppliers out there. But I just want to bring up that Microsoft didn't really do that bad today. Apple did kind of blow apart. And to me, there's a couple of reasons why.
Well, Apple they have a big competition in China too, right?
They do, but I'm going to tell you, I actually wrote about it in the Tech Insider today. There is something that has significantly changed in the way that the press covers Apple over the last 2 weeks. And that is, before, it was Apple could do no harm. It would probably be like the press around the Eagles and, being the hometown press, right?
Okay, yeah.
You're not going to talk bad about the quarterback. You're not going to do all that, right?
Yeah.
over the last few weeks, the reviews for Samsung have been kind of like the reviews that Apple kind of used to get.
They're good, huh?
The new thing, if you haven't seen the new phone, it is...
They just sent me a thing. Look at this, Galaxy S6 available now. They just sent it on my phone because I got a Samsung.
The new Plus and the new Edge
is
with,
cool?
With a pin. I played with it on Wednesday night. My God, it is absolutely... there's always been kind of a rough edge to Samsung.
Yeah.
That people said, I'm going to get the Apple because it just seemed... There's something, I don't know what it is.
See,
right?
I like Samsungs, but yeah.
Right. But they maybe got Apple. Well, there were a lot of people this week going, this hardware is so
Now, what's the difference between, they sent me 2 messages today. What's the difference between the Galaxy, the Edge, and the Notes? The Notes is not a phone, right?
They're 2 products that are fairly close.
Okay.
The Note and the software and the design is aimed at businessmen.
Okay.
Because it's a little bit bigger, it's a little easier to take notes. It's a little easier to do things out on the road.
Okay. Is it a phone too, though?
They're the exact... Remember when I was showing you all the things on the edge?
Yeah.
That were on the side?
Right.
Well, these new phones have 2 sides now. It's not just on one side.
Really?
There's special alerts on both sides.
Okay.
The clock can be on it at night when you set it next to your bed.
Okay.
They all have wireless charging. But, I mean... If say you needed to write a phone number right now, don't even turn on your phone.
Right.
It's got a little pen. You pull out the pen, you write on it, and it's like writing with a grease pencil kind of on the phone. So if you just needed to write a phone number real quick, or a grocery list, just write it down, hit a button. Pretty soon it takes that text, it turns it in to like an email, and you hit a button and it sends it. I mean,
that's pretty cool, man.
If you have to go through a lot of the features on it, Samsung has made a quantum leap between the last phones where there were a lot of very kind of not horrible things, but rough things.
Yeah.
Got rid of all of them. They've added all the new features, the stuff that everybody wanted, which was that rolled edge and the additional buttons on the side. They've cleaned up all their software. Apple has some significant competition. The hardware is so much better than what Apple has now.
Wow.
Now, of course, Apple has their rollout on the 9th,
right.
too.
They'll be there, right.
But guess what?
What?
Apple has to buy all their parts from other people, including Samsung.
Right.
Samsung only needs one part to make their phone from somebody else. Literally every single part on that phone is made by Samsung now, and they control it. If they don't want to give those nice features like the rolled edge phones, they don't have to sell them to Apple. Right, so there is a thing where Apple probably has a little better software. Samsung definitely has better hardware at the moment. So we'll see how that goes. Samsung's made much better software. Apple has had some issues with the rollout.
What is the better software that Apple has?
Just the integration of all the different stuff.
The easiness of it, right, I guess?
Right.
Yeah.
But they've broken that. Remember we were talking about atomization?
Yeah.
Their music app, everybody for the reviews are going, I kind of like the idea that they had a radio station in Apple Music, but I wish it was a separate app. I heard of that probably 3 or 4 times in the last 2 weeks from reviewers.
Yeah.
And that they're kind of making some of the mistakes that other people made before.
I don't know.
Thinking about it.
Stay right there, folks. Dave White, Tom O'Brien. We're going to be coming right back. Dow finished down 530. NASDAQ was off $171. You had the S&Ps down 55. We're coming right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. We appreciate you growling and prowling with us out here. And, folks, if you'd like to test drive my gold report, you can do it for 30 days absolutely free. The way you do it, go to TFNN, go to newsletters, go to investment newsletters. We're looking at, Dave's got a slide up. It says Boeing 747.
Right. Been in the air since 1969.
Yeah.
The king of the air, except if you want to talk about the Airbus 380, which breaks runways and runs into everything that's anywhere even close to it.
Right.
These big planes, Airbus hasn't sold a 380 in 15 months.
Okay.
Boeing sold its last 2 747s, the new ones.
Yes.
To replace the 747s for Air Force One.
Okay.
And that's going to be it. There are not going to be any more 747s.
Wow.
But interestingly enough, if you've ever flown or got a pilot's license, they have these airworthiness directives.
Okay.
And I know there's a couple people in the den that are pilots.
Yeah.
But these will tell you to fix things, or you have to do things,
Sure.
other things like that. Sometimes these things are so expensive that the planes never fly again.
Okay.
Okay. But not a problem with the 747s, but they almost all these airlines and the people at Boeing over the last couple of days pretty much are saying that they figure that the last 747 in service will be totally out of service within the next 5 years because of these new airworthiness directives.
I see. Okay.
So it's going to open up a lot. Now, a lot of people thought about buying these big new planes with, seating 500 people. They just really haven't worked out the way that a lot of people thought.
Right.
The same reason that even the new...
That's a 1,000 people per flight.
Can you imagine 2 of those hitting each other head on? You'd never hear never hear the end of the death count, right?
No, I think about just marketing them. That's a big demand. That's
getting everybody on and off the plane is time consuming, even though they've got all the windows and doors and everything. But the thing has been, these things every week it seems like they're knocking into another plane because the things are so massive they can't get them around these established airports. But this does mean that there's probably going to be a lot of these planes replaced in the next 5 years. Now, Boeing took apart today. We were just looking at it during the break. I'm not saying
it's a monster ABC down.
Right. But at some point in there, we're going to look at a ton of 747s. They're going to have to be replaced by other planes out there. And you know, a big user of these are things like FedEx and UPS. Fill them full. These things are probably going to be around for a while, but at some point they're going to be out there. But I found it very interesting to think that Boeing, why it's getting hammered today, probably doesn't have. It's not one of these companies that anybody, you know, they can go up and down. I don't think anybody's saying they're going out of business.
No.
And I
think they can get hurt. I mean, bad economy is bad for everybody. Yeah, right. And what happens at Boeing is that their lead time is like huge, 10, 12 years. You know, you're talking. So
they plan 10, 12 years out. But, I mean, if you buy a plane today, you're probably going to get it in 5 years or 4 years, right? Right. So a lot of people have already ordered planes. They'll be canceled. Instead of getting it in 4 years, maybe you get it in 2.5 years.
You jump up the list, yeah.
Yeah, you jump up the list, and then pretty soon you're back to a 5-year waiting list, and then something bad happens in the economy, and it's back down to a 2.5-year waiting list. But they've got a pretty long lead time. It takes about 2 years of ordering parts before they're ready to assemble the plane.
No doubt.
So it's nothing new in that. Anyway, I wanted to talk about, go to the front page of TFNN. You can check out my Tech Insider.
Yep.
It's under investment newsletters. That's the longer term one. You can also go to the Path of Least Resistance. That's my daily newsletter.
They're both right under newsletters, folks. And Sunday night, folks, okay, the bottom line, hey, listen, if you don't have stops in, get stops in, folks, okay? Because the bottom line is that, this market wants to go to the October swing points. And then the NYSE has already done it. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Whatever you want in life, folks, visualize it like a nice big motion picture. Step into it. Take ownership of it. Fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. We look forward to speaking to you next Monday. Go get them. Thanks, Dave.
You bet.